Good afternoon, ladies and gentlemen. My name is Tutsi Dombo, Country Head at Invest Africa. On behalf of Invest Africa, I would like to welcome you to this afternoon's webinar, The Decentralized Finance Revolution and How It Will Change the Way We Do Things, in particular in an African context. This gathering serves as a platform to explore and understand the rapidly evolving landscape of decentralized finance within the African continent. As many of you know, decentralized finance refers to the revolutionary concept of providing financial services without traditional intermediaries, such as banks, through the use of blockchain and cryptocurrency technologies. We would like to thank ICAP Africa for partnering with Invest Africa on what should be a very riveting conversation. ICAP has been a long-standing partner of ours, and we are delighted to be bringing this conversation to light. And that is what we do at Invest Africa. We create an environment that enables partnerships and encourages debate. We have a footprint of more than 400 members comprising of multinationals, private equity firms, institutional investors, entrepreneurs, development finance institutions, professional services, and government bodies. We support our members through events such as these, with a calendar of over 100 events a year. So now on to the main actors for today. I would like to take the opportunity to introduce our esteemed panel of speakers. Our first speaker is Mr. Chris Morris. Yellow Card's co-founder and chief executive officer, Chris, is a 27-year-old American tech entrepreneur who has spent 5 years living and working in Africa, making significant contributions to the continent's financial services industry. With Chris at the helm, Yellow Card has facilitated over $2 billion in transactions, grown to over 200 employees across 25 countries, and launched full on and off ramps for local fiat currencies in 17 African markets. Our second speaker is Mr. Michael Portkita, financial markets analyst at ETM Analytics. His experience set is chiefly derived from cross-country trend and structural analysis into the major DM and EM countries, using the macroeconomic as well as financial markets data. In addition to his role as financial markets analyst, where he contributes to the body of thematic research ETM conducts, Michael heads up the product development team at ETM that focuses on innovative and bespoke model development. And lastly, we have Mr. Duncan Keel, Chief Executive Officer at ICAP Africa. Duncan has worked in financial risk management, financial derivatives, and investment fund management. He has worked extensively in Africa and lived in South Africa for several years. He has a good understanding of the opportunities and the risks of the African markets and the intricacies of financial structuring in that environment. He is passionate about the environment, building value, and having a positive social impact. Our session this afternoon will run for about 40 minutes, after which I will open up the floor for some questions. During the duration of the webinar, please may I ask that you add your questions to the chat, and we will try to answer as many as possible with the remaining 10 minutes. With that being said, I would like to hand over to Chris to set the scene.
Cool, thank you so much. Am I able to share a screen?
Yes, you may, Chris. Just use the share screen at the bottom if it is appearing on your side.
Yes, yeah, I think you have to enable it.
Okay, just give me a moment.
Cool. Cool. Hope everyone's doing well. I'm Chris. I'm gonna introduce you to a little bit about what we do and how we help companies across the continent with treasury management and international payments, all using stablecoins. So for those of you that are not familiar with stablecoins, stablecoins are essentially just US dollars on blockchain technology. It's it works the same as Bitcoin or any other cryptocurrency in terms of being able to move freely around the world. You can move it very easily between any address. And the difference being that it's pegged 1-to-1 to the US dollar, and it's backed by dollars held in bank accounts in various parts of the world, depending on the stable coin that you are utilizing. And so, the real benefit of stable coins is that it allows you to move dollars around the world without the volatility that something like Bitcoin or Ethereum might introduce. And in the process of moving those dollars around the world, there's no banks involved. And so where with hard U.S. dollars, moving them in and out of banks, especially on the African continent. It can present quite a bit of risk. There's quite a number of instances that can be pointed to where this money gets trapped, this money gets converted, right? And stablecoins remove that risk completely, right? This money exists on chain. It exists only within your wallet, and you don't have to worry about the bank, telling you what you can or cannot do with those dollars. Um, let's see.
Chris, you should be able to share your screen.
No, it still says host disabled, but that's okay. I will just run this a cappella. So just to introduce us, we are the largest and only licensed stablecoin on and off ramp on the African continent. The yellow card, that is, we work across 20 African countries. And as Tutsi mentioned, we've done over $2 billion in transactions, and we serve over 25,000 businesses across the continent every month. We talked about stablecoins, right? But that's really what powers all of these transactions, right? So this entire all of these 2 billion of transactions that we've done, it's fiat to stablecoin, stablecoin to fiat. And so across the 20 African countries, all of sub-Saharan Africa that we work in, we move the local fiat into USDT, USDC, PYUSD, etc., and vice versa. Just to give you an idea of our footprint, we operate in all of the major markets in sub-Saharan Africa: Nigeria, Kenya, South Africa, etc. We have a very large Francophone presence. We serve almost all of Francophone Africa, including DR Congo, Cameroon, Cote d'Ivoire, Senegal, and then pretty much the rest of the continent as well: Zambia, Malawi, Tanzania, Uganda, Bots, etc. We work with almost 50 banks across Africa, over 40 mobile money networks, and we have cash agents laden across the continent as well, which again just help facilitate those on and off ramps. As I mentioned, we're the only licensed on and off ramp on the continent. We have licensing in 7 countries. We have full financial crime registrations, sandboxing, data protection registrations, etc. We have a full KYC AML suite, sanction screening, financial crime, all of that. And I can guarantee you, from experience and having worked with banks across the continent, the compliance suite that we offer is significantly more advanced than any bank on the continent, never mind any other fintech company. We, as I mentioned, work with over 25,000 companies every month across Africa. We serve everybody from banks and financial institutions to multinational companies, Fortune 100 companies that are operating on the African continent, fintechs, importers, manufacturers, you name it, right? And all of it boils down to the treasury management aspect of it, right? If you're, just to be honest, right, if you're a business operating on the African continent, especially in a country like Nigeria, and a number of others, you have money trapped, right? And you have money that is very difficult to move, very difficult to utilize and to actually do anything with. And so, businesses are able to come to us. They give us the local fiat. We convert that into stable coins and then use that to deliver dollars to wherever is needed. So it makes it very easy for the business. It allows you to, again, manage your treasury, facilitate those international payments that you need, etc. Works the exact same way in reverse, right? So we help not just companies on the continent, but also companies outside of Africa that need to get in. We have relationships and partnerships with Coinbase, Cash App, PayPal, and a number of other major companies, especially remittance companies going the other way, right? So this is us taking dollar, pound, euro, etc. Again, having that converted into US dollar stablecoins and then using that to deliver local fiat to the business wherever they need in the African continent. And yeah, I mean, look, the benefit of working with us on the treasury management aspect is that we have deep liquidity spanning across all of these African fiats. Everything is settled same day, right? The only exception to that is in countries where bank transfers take longer than a day. And you have access to hard liquidity and hard currency liquidity on demand 7 days a week. We operate 24/7. Yeah, and we serve, as I mentioned, a number of financial institutions, banks, fintechs, etc. So the odds are, if you're working with a company to do treasury management today, or you're working with a company to do commercial trading today, those guys probably get at least some of their liquidity from us. We're one of the largest market makers on the continent. Other things that we offer, we have a payments API, which allows companies to do exactly everything that we just described, just through a automated portal, right? So using the payments API, you can plug in directly. All of your payments can be routed directly through stablecoins into the various different African countries that we support, and vice versa. It allows you to collect from any of the 20 countries that we support. We also have a widget which is perfect for companies that don't do KYC, non-custodial wallets, and organizations like that. And yeah, look, I think the major thing that we've done is we've helped to bring a number of companies to the African continent, right? We have partnerships, like I mentioned, with Coinbase, Tether, Circle, PayPal, Block, Cash App, Western Union, MoneyGram, Opera, and the list goes on, right? And so our mission is really to bring Africa to the world, and bring the world to Africa. And yeah, that's I think in a nutshell what we're doing. Yeah, look, all of this is made possible by blockchain and by blockchain technology, stable coins. It really is a revolutionary technology that enables us to be able to move this money from point A to point B. And so that is how we do it. And yeah, I will pause and hand it back over to Tootsie.
You're on mute, Tootsie.
Of course, I was on mute, Duncan. Thank you. So at this point, I'd like to hand over to Michael to give us a little bit of an economic overview from your vantage point. Thank you.
Hi, everybody. My name is Mike. I work at ETM. We do a range of financial market analysis, and over the last couple of years, we've been looking into more crypto-based markets and some of the advantages. And I was really thinking about what I could possibly say to a bunch of people that are probably relative experts in this field. So I just thought I'd do quite a little bit of an overview. And then get into some of the factors that we've noticed. You should be able to see a little presentation. Cool, great, thanks, John.
Yes, we can see the screen. Thank you.
Okay, so, well, I guess the first point to make on DeFi is that it's really a financial innovation software pipeline. But importantly, all of the technology, or much of the technology that's being created, is seeking to enable greater monetary autonomy. And this is quite a significant shift because of what's happening within DeFi in general. It's allowing for traditionally siloed functions to be practically automated. And of course, this is driving a lot of development and innovation, such as what Yellow Card has been creating. And these are really the downstream effects of Western technology. And in the case of Africa, there really is quite a good bull case if you consider the network effects and the enhancements that can be created in failing or otherwise depressed financial systems. Now, if you think about this, the fourth industrial revolution really is that. It's about cheaply automating processes. And generally speaking, this allows new capacities and competition. For Africa, the bull case really is that you can now import capacities and liquidity that wouldn't otherwise be available in these systems. And well, that's opening up a whole new range of potential technologies, including lending platforms, for example, farm management platforms, investment platforms that would allow people to more closely monitor their products. And all of that is enabled through more of a blockchain distributed ledger type system and framework. But one of the main facts that really dawned on me is that the total DeFi staked coins that exist in the industry, it's roughly $50 billion, which is really, really low. Considering that Apple's spending about $30 billion a year just in annual research, it shows you that we're really talking about a very nascent and small kind of technology and sector, but the potential is high because of the leapfrog capacity within the technology. Just to show how small crypto is in comparison to the rest of the world, this is a little bit of a reality check. This is the total Bitcoin market cap relative to financials and industrials as listed on the S&P 500. We're talking about a very, very small system, but the downstream effects, such as liquidity in Africa, are already starting to make their way forward. And this is the other aspect that is really supported by the network effects thesis. It's saying that, as take-up in crypto rises, there's a massive ceiling for the market to go to. One of the most important factors to keep in mind when you're creating a new product generally is that the regulations in the sector are really coarse and hard to understand. Great examples were RAND arbitrage trading systems that sought to try and close the arbitrage gap, but people ran into regulation hurdles quite significantly with the SAR, and many of these funds have already been shut down. It's just to say that no matter how innovative and return driving your product is, keep in mind that regulations will often just snuff it out, especially if it's making very significant returns. For African investments, this also says that it's really worth thinking about where you're investing. Firstly, there's got to be the economic case, but regulations should be supportive. Countries like Rwanda and Kenya, for example, much better investment destinations than some of the countries that have internet speeds of, say, 5 megabytes per second, like Niger. If we look at the industry as well, this is another way to try and bring it back to reality, which is to say, what do we really have? This cryptocurrency, the invention of it, mostly Bitcoin and Ethereum. From that, the highest volume, greatest development has been trading platforms. After that, there are some lending platforms that have been developed. And then we've got interesting technology that's been enabled by blockchain, but it's not really being used, not yet at least. These include options protocols, of course, project management systems, etc., and then smart contract structuring, which could create almost anything. Very exotic, though, not really something that is going to be widely used within the system. I think about what opportunities exist for Africa, for example. Generally, such as with Yellow Card, we're talking about frontier market liquidity and arbitrage opportunities. The other big movement really is the monetary autonomy movement, and countries like El Salvador, etc., have shown exactly how significant something like Bitcoin can become within a society. Then there's also the new entrants into the market, the new banks that exist. Time Bank, for example, comes to mind. And then we've got a range of other tech insurers that are also using fourth industrial revolution / blockchain / DeFi technologies. And those are regular actuaries that are automating themselves and creating new insurance systems. And then in terms of talking about Africa, something that seems quite pertinent is the SA Taxi and Transaction Capital case study. And SA Taxi in particular is quite an interesting case study in this context. They had quite an interesting bull case. They were investing into a diversified landscape that had relatively high loans, i.e. funding taxis that were active in taxiing people around, for lack of a better word. Now, these are promised high rates of return, but there was hidden high risk that they didn't see in their investment thesis blind spot. And effectively, the company swung from earning billions of rands to making more than $500 million rand in losses. And if you look at the company, it was really SA Taxi that did it in terms of the transaction capital returns. Now, what is the lesson that one can take from this? It's that no matter how sound you believe that your investment thesis is, in Africa, there really is structural risk that is hard to model for and hard to think about correctly. And it's a good idea to think about investing in such a way that your capital is preserved very often. A lot of the work that we look at when it comes to Africa is mostly about capital preservation. And that has to do with people who have dollars, they're investing in Africa, and they're not quite sure how to make sure that the investment works if the currency loses, let's say, 50%. Now, there are ways to do this, and if that really is a problem that you have, feel free to reach out to Duncan, for example, set up a session. Generally speaking, as a result of these business actions, we're looking at transaction capital unbundling, very high NPL rates, very low recovery rates. This could be your business. And what this effectively means is that transaction capital was not thinking about state space properly. Now, excuse my lack of artwork here, but effectively what state space is looking at the difference between how it is and how it could be. When it comes to DeFi and investing in Africa, the reality is that there are just a crap ton of imperceptible hurdles that sit. It could be population problems, it could be regulatory problems. You could be investing in a country that's got a currency that's about to devalue 40%, which we'll get to in a bit. And it's really just to say that how it is and how it could be, how you perceive it could be, it's not always the case. With product development, you're often solving very specific problems. You're servicing very specific clients, and this is how a path mostly looks like. I drew that one myself. Some of the ways to think about products in a place like this is look at innovative products, look at faithful clients, work on sound returns. Risk management is a very key factor when it comes to Africa. And we're focusing on useful products and services to new markets. So with the Yellow Card case study, for example, we're bringing liquidity where it's never been possible before, and they're using DeFi rails in order to achieve that. Commendable. Something to think about when it comes to Africa is that there is a frontier markets paradox. It's to say that what's effectively happening is that the first world's DeFi tech is being deployed in these EM stomping grounds, and the returns are significant because there is an actual need. some of the factors to keep in mind when you're thinking about this, though, is that, while emerging societies are getting a leg up, it really is just into better banking. The rest of the economy isn't developing in the same way. So you're creating very significant products that it will likely take 2 or 3 generations before the downstream effects in the rest of the economies are seen, unless you're talking about places like Rwanda, where there's been a mass liberalization. And of course, these places aren't without their problems, just to say. Now, that speaks about the cultural differentials. If another aspect of the work that I run into at ETM is talking to people who are of the European mindset and trying to invest in Africa. Consider that there is a very different environment. The concept of risk is completely different. The concept of loan defaults is very different. And there's actual risk, such as real weather risks, for example. You could be investing in an African crop and your blockchain is monitoring it greatly, but you know what? You're just going to get a flood. And I've seen that play out. So Africa is a very different place. Great example that's kind of just popped up is the Nigerian Naira. It's going through a currency devaluation at the moment. We're looking at a currency that's completely lost the fair rate pricing, and this has to do with dollar liquidity problems. Now, if you are bringing dollar liquidity to a place like Nigeria, you're a very loved human right now. If you're trying to get your money out of Nigeria, good luck. You're losing money every day because of the currency devaluation. So, in Europe, a volatile day might be 2 or 3%, and we're talking about massive overnight devaluations in Africa. It's a structurally very different society. And then I had to think about the bull cases for DeFi in Africa. Generally speaking, as Card has shown, liquidity and remittances is huge. I think that there could be quite a lot of value in creating the frameworks and systems that enable FDI of the future. So if you think about what foreign direct investment will be, there's a lot of green investment going on. There's a lot of ESG-based investment. Blockchain systems in general can enable that to happen. The same systems can enable asset management and cross-country business operations. But the big thing that most people are fighting, and that will likely create regulations hurdles, would be illicit activities in general. Just have a look at the biggest trading volumes globally, and you'll notice that there's one African country that just so happens to have a very high level of cryptocurrency trading. How much of that is illicit, we're not sure. But it really is a big elephant in the room, and it leads to structural risks because regulators upstream in the US, for example, could change things such that it affects the downstream developments. And then the last thing I thought about was really bear cases. And if you're investing and making work in Africa, just consider that your investment needs to follow this idea of utility value maximalism. It's to say that what you're creating needs to be creating direct value, and then the business case works. You're talking about ICOs and special coins and agri-coin and all of those ideas. They're really stuck in the imaginary realm, and valuation becomes very difficult. All the failures that we've seen generally have been of either culture or investing in a place that's not ready for it. Effectively, DeFi that fails will not understand what the cross-legal implications of what they're doing are, and then you run into hurdles, difficulties doing business, and often business failure. And then it's also just to say that since we're at this very nascent level of development, what's likely to happen in DeFi in general is that we're going to see a long period of development, failure, and consolidation. Very, very young industry, but it's very exciting to see what might come forward. At ETM, of course, what we're very focused on is thinking about whether or not a project is going to be viable before money is spent on it. So if that's the realm that you're in, feel free to reach out and book some time. And yeah, that's everything from me for now. So I guess I'll hand back over.
Thank you, Michael. Thank you for that. And I think last but certainly not least, we'll ask Mr. Duncan Keel to walk us through some of the work that ICAP has been doing. And I'd like to remind our audience to please put their questions in the chat. Thanks.
So yeah, I'm very much the old man of the panel. It's actually a bit scary hearing how young Chris was. I hadn't realized that, but my attitude is that if I can understand DeFi, then there is no excuse for anybody else not understanding it, because my background is solidly in TradFi, and it's something I'm very excited about. Michael brought up some very interesting points about barriers to entry, but I'd like to put a slightly different slant on that. Basically, we are all here because despite the difficulties of doing business in Africa, we believe in the promise. And at ICAP Africa, our job is to offer services and products that make your job easier doing business here. So ICAP is part of the TP ICAP group, and ICAP is the biggest money broker in the world. You can see that we have lots of offices worldwide. And our usual business is interbank broking. It's of every major financial derivative and commodities and commodity derivatives. But the part of the company that I run is corporate and institutional facing. ICAP's been around in Africa for 12 years now. Actually, it's a bit longer than that because we bought a company 12 years ago, which had been around for 5 years already. But we have a very good network. We're lucky to work with companies like Yellow Card and ETM because we can offer those services to our clients, and it enables us to expand our range of services, which is very important to us. So African financial markets are fragmented, opaque, and illiquid. And our opportunity is that here banks can't offer all of the services that they do in Europe or the States, or indeed Asia. And so our part of the business attempts to fill in the gaps. We spend quite a lot of our time at the moment taking money out of countries for people in the same way that Yellow Card does, because of the dollar liquidity squeeze across the continent. And as Michael touched on, and as Chris has also highlighted, this dollar liquidity squeeze is probably here to stay. Nigeria's government has been making some pretty courageous policies, but unfortunately, there's a long period of pain, I think, before that economy really sorts itself out. ICAP's always looking to expand its range of services. We are traditionally interbank and purely TradFi, and the corporate-facing part of the business, ICAP Africa Direct, is now looking at a different range of services, and we're quite excited about some of the opportunities that there'll be on blockchain. We've identified a couple of really decent opportunities that I'd really like to talk to you about. And they solve three of the biggest issues that there are in the markets in Africa that we think. So first one is a lack of liquidity. The second one is a lack of transparency. And the third one is a lack of uniformity of regulation. So Africa traditionally doesn't trade much with itself. This could be for sort of old colonial and historical reasons, where the colonial powers came in and they took the raw materials and it always went offshore. So the infrastructure means it's always outward looking, but it's also got something to do with tariffs and boundaries, and also a lack of uniformity in sort of trading and financial regulations. The African Central Free Trade Agreement area is beginning to address that. And, you know, we are very optimistic that that will generally change things. So DeFi products can change the problem of lack of liquidity, because the barriers to entry are much lower in DeFi, and they allow greater access, and that will attract more investors. The lack of transparency, DeFi products are all in the public domain, and they're transparently traded and recorded. And the lack of uniformity is that DeFi products are global, they transcend boundaries. So the rules tend to be uniform, because basically if you want to join in now, you will probably go along Ethereum's rails or on the very established blockchain rails, despite the fact that there are probably, at the last count, probably around 250 different types of blockchain. So what are the benefits of tokenization, which is the first, sorry, I will just go back slightly. I wanted to give 2 examples of DeFi products that we are excited about. The first one is tokenization, and the second one is the issuance of debt and equities on blockchain. So tokenization is, tokenized assets are blockchain-based tokens that digitally represent real-world tradable assets. And their attributes are one, they can be fractionalized. They can be broken down into smaller chunks, bite-sized chunks, and they represent partial ownership. Secondly, they're programmable. They're issued as programmable tokens on a blockchain using smart contracts. And thirdly, they're asset agnostic. You can tokenize anything, genuinely anything. And we've seen recently tokenized bonds, tokenized shares, vintage cars, property, even a racehorse. So what are the benefits of tokenization? A reduction in cost. Tokenization cuts out intermediaries and layers of admin, and that means a huge reduction in cost. They're faster transactions. There's no clearing required and far less admin, so transactions can be almost instantaneous. Superior transparency. The global financial crisis in 2008 was partially caused by hugely complicated derivative products, which were very difficult to mark to market and track the value of. Tokens based on real-world assets are transparently recorded and move in line with their underlying assets. Increased accessibility. Mike and I worked together recently on the tokenization of African government Eurobonds. Part of the reason that we did this was because a colleague of ours was talking about how attractive the yields were and how difficult it is for an individual to access those yields. Unless you've got about, I think it was $250,000, and you're quite patient because it takes quite a lot of time and paperwork, it's difficult to get into that market. But what we wanted to do was chop these assets up into much smaller pieces. $500 actually is what we came up with, and we can offer those out to individuals. Enhanced liquidity is another thing. When you can get products into a much bigger investor base, it's much easier to raise money. So on the flip side of that coin, as well as giving access to investors, it gives access to funders as well. Increased innovation is another benefit. The versatility of these tokens and their attachment to smart contracts will lead to spectacular innovation. You can genuinely do a number of very, very, very difficult things easily and cheaply with these products. I want to say why is it relevant to Africa? There's an increasing population of savers and investors in Africa looking for yields, a burgeoning middle class, let's say. There are also investors around the world who are bored of low yields elsewhere and have been attracted to Africa by the interesting yields. But most of these yields are out of reach to the individual. So the tokenization of African assets will allow access to foreign investors and should make fundraising easier. The second example I wanted to say, and I apologize, I'm on the wrong slide too early, but is issuing debt and equities on blockchain. Bonds, the first blockchain issued bonds were around in 2017, and probably the best known one was 2018 when the World Bank issued a 100 million euro 2-year bond. It was aimed at sustainable development. And so it's not a particularly new thing, but as Mike also said, the uptake has been very slow. That's partly to do with regulation, and we'll come on to that in a minute. Blockchain IPOs, another really interesting function for these things. The first one I could find was 2015, Consilium listed on the London Stock Exchange, actually on AIM. And again, blockchain IPOs have not really been taken up, but it's an incredibly simple way to raise money. The benefits of raising money like this, raising money is not easy. We know that because ICAP offers fundraising to many of our clients. It's a very conservative and rigid market. But actually, bond issuance and IPOs, they're expensive. And they're typically organized and sponsored by investment banks who charge high fees, and they're not interested in raises below a substantial threshold. Raising money onto the blockchain can be done much more cheaply and for much smaller amounts, and it allows access to a much wider client base. Why is it relevant to Africa? SMEs in Africa are too small for microfinance and generally they're too big for microfinance and they're generally too small for most banks. And yet, according to the World Economic Forum paper in July 2023, SMEs in Africa make up 95% of registered companies. They provide just over 50% of GDP and 60% of employment. So filling the funding gap for SMEs does not simply have huge social impact, it's also a major investment opportunity. And that's really why we're here. So what are the barriers to DeFi opportunities and growth? Reputation is a big one. Mike also touched on this, but BitConnect, FTX, and Genesis, huge scams, huge failures, huge bankruptcy, enormous amounts of money lost. The market is misunderstood, and like all things, there's a great deal of mistrust. But we think the gold rush is probably over now. Things are managing to sort themselves out, and the serious players are still there. Regulation is another one. This is disappointing. Banks in Africa have been looking to Europe. South Africa in particular is looking to Basel, and they want to copy what goes on in Europe. But the thing is that these products solve a real problem in Africa. They're used as speculation. They also solve problems in some ways in Europe, but they don't have the same problems over there as they have here. So we want to say to the central banks, get on and regulate, because the banks and corporates can't play in gray areas. They just won't do it. And these are still, unfortunately, gray areas. Education is another barrier to entry. There's a lack of understanding by individuals and companies in what these products are and what you can do with them. Just a matter of interest, we have ICAP training solutions, and we do online courses to explain the background to these things, how they can be used, and what we think is the tremendous potential in them. So, the opportunity and the growth. There is no problem with the technology, that is for sure. Blockchain and DeFi are here to stay and will soon become so accepted, we think, that they'll be invisible. Mike is a little bit more skeptical about this, but I'm going to take a more optimistic approach. I genuinely think these in my lifetime, and I'm significantly older than him, will change the way we do things quite significantly. And Africa has leapfrogged in a couple of major industries. Mobile telephones. There were very few fixed lines in Africa for infrastructure reasons. The uptake of mobile telephony was greater here than probably anywhere else in the world. Also sort of mobile banking, because retail banks were so slow, because the populations are so spread. So mobile banking was accepted and taken up again very quickly. We also think there's a good reason why DeFi products will be taken up quickly here, is because they solve real problems that you don't necessarily have in the rest of the world. So in conclusion, I'd just like to say that we think DeFi products will change our world as surely as AI. We want to be in at the start rather than play catch up, and we invite you to continue the debate and explore with us the potential of DeFi products. And after that, I'll hand back to Tutsi for any questions.
Fantastic. Thank you. Thank you to Duncan and Michael and Chris for a very riveting conversation this afternoon. So I think my first question this afternoon is going to go to you, Michael. So with the sort of rapid evolution of decentralized finance and blockchain technologies, where do you see African financial markets in the next 5 to 10 years?
Sure. That's a big question. Well, I guess African financial markets, because there's a increased capacity for innovation, there will be hubs that develop, and already we're seeing that in certain parts of Africa, such as Kenya and Rwanda, for example. You know, those places are likely to develop much faster than the rest of Africa, but I'd say that the reality is that most of the continent is still stuck in bad economic policy that will hinder growth and development, and it's likely that we would have to see massive political and fiscal reform across the region before Africa genuinely has a bull case. And that it is where most of the population of the world is coming from, if you were to look over the next 20 to 40 years. So it's going to happen one way or another. There are just, Africa is going to be the biggest continent. And I think DeFi and crypto in general will create a much better chance of the countries that are going to floating, and it's going to be in a parallel market environment. Well, we'll see. We'll see if it works. I still think that DeFi is so small relative to traditional financial markets. If a big bank sets up in a country, it'll have more flows than a crypto environment could. So let's see how it pans out. But yeah.
All right. Thank you, Michael. So my next question, I think, could be either for Duncan or for Chris. So when we look at, companies and investors who are new to the African market, what advice would you give, in terms of navigating some of these unique challenges? I think Michael called them imperceptible hurdles, when it comes to the opportunities here on the continent.
Hey, listen, I'm
I don't know
happy
which
to
one.
take that.
Yeah, go ahead. Go ahead.
Oh, sorry. Yeah, no, I think look, when it comes to working on the continent, I think frankly the first step is making sure that you have a very good local team, right? And that you have somebody, depending on the country or the jurisdiction that you're looking at operating in, making sure that you have someone that you trust on the ground, that you can work with there. And I think, this is important in, most parts of the world, right? To have somebody that understands the culture and understands, the nuances on a country by country basis. But I think it's ever more important, on the African continent. Yeah, I mean, I can tell you for a fact when we were starting out in Nigeria, right? If we didn't have the couple of guys that we started the company with, it wouldn't have been possible, right? It wouldn't these are not it's not generally countries that you can just go into and sort of understand, right? It's there's quite a bit of cultural nuance and just unique unique happenings that go on, and it's so diverse across Africa as well, right? It's Nigeria and Botswana have about as much in common as Italy and Germany, right? And so I think that would be one. Number two, I mean, in terms of mistakes that we made early and mistakes that we see other companies make, is you need to have a plan. And I'm not just saying this because this is, obviously relevant for sort of the discussion that we had here, but you have to have a plan for what you're going to do with the local currency. If you are doing business, you're doing sales, doing anything in in an African country, you're going to end up with a lot of money locally. And you need to have a plan for what you're going to do with that, because if you go to a bank and try to get dollars in most countries, they'll laugh you out of the bank, right? And so it's very important that going in how you're going to manage that risk and some of those issues. Yeah, I mean, outside of that, I think it's I think the other thing I would say, and look, I think for look, for us, for example, we have an American top co, and so some of the stuff is in law already. But I think make sure when you're entering these countries that you keep everything above board, keep everything well documented, that kind of thing. There's going to be a lot of temptation to take shortcuts. But overall, just looking at the continent and looking at the, how do you improve the future of the continent, you can't take those shortcuts, right? Some of the, the cultural aspects around corruption and things like that. It really does take everybody to fight against that. It's not just a local problem; it's also a problem of international companies coming in and contributing to that. And so that's another thing that I would that I vehemently believe is that it takes all of us to actually fight against corruption and sort of improve that for for the sake of these countries moving forward. And then the last thing, which sort of goes back to point one, is just hire locally. I think if you're if you're going to do business on the continent, you need to do it in a way that actually contributes to the broader economy of Africa and of whichever country that you're operating in, right? So get a local entity, hire people locally, have an office, actually set up, right? If if your focus is going to be on Africa, your developers should be out of Africa, your marketing team should be out of Africa, your designers, etc., right? There's plenty of talent across the continent. So I would certainly encourage people to look locally, right? It's not just good business. It's also good for the development of the continent as a whole.
Fantastic. Thank you for that, Chris. And I think we just have time for one more question. So Duncan, I'm going to throw this one at you because I feel within your presentation, you really spoke around sort of some of the regulatory challenges. So I think the question here is, what are the main regulatory hurdles for tokenization, when we're looking at the adoption in African markets, and what steps are you taking to address those?
Honestly, we're not taking terribly many. It's the sad thing. We've applied to be on various steering committees. One with SARB here, and also one in Ghana and one in Nigeria. Unfortunately, they have almost exclusively banks on there, which is a bit of a shame because that's TradFi, and the banks have almost a vested interest that DeFi doesn't succeed, for the simple reason that they're then surplus to requirements in many ways. That I think that the biggest hurdles to regulation needs to understand how good these things are. The problem in central banks in all over Africa like control, governments like control, and allowing DeFi to get on with it cedes control somewhere else, and they really don't like that. You can see that there are exchange controls in place in so many different places in Africa, and they make what they're basically trying to do is protect their dollar borrowing more than anything else, and their balance of payments. And it's kind of the wrong way around. DeFi products can actually solve problems for them, and I think education is if the more people understand how good these products are and how useful they are and how much more cheaply and quickly you can do things, the quicker the uptake will be. But as I say, there is mistrust. And African central banks generally don't like ceding control to anybody. So persuading people that they're good is the best we can do at the moment, unfortunately. We need success stories. It's really what we need.
Right. Absolutely. So thank you for that, Duncan. And I think at this point, we can wrap up this afternoon session. So I'd like to thank everyone for joining us this afternoon. We will provide you with a recording of the session. It will also be posted through our social networks. So please look out for that. And yes, once again, I'd like to thank Duncan, Chris, and Michael for your insights this afternoon, and for allowing us to gather this audience to discuss quite an interesting topic. So yes, thank you, everyone, and have a good afternoon.